For the last few years, everyone has been obsessed with one name: BlackRock. We know they manage over $14 trillion. We know they are buying up single-family homes. We know they are forcing ESG scores on corporations. We call them the shadow government. We call Larry Fink the king of Wall Street. But what if I told you that we have been looking at the wrong villain? What if BlackRock is not the predator, but just the prey? Imagine a company so powerful that it owns the majority of BlackRock itself, a company so secretive that it technically doesn't exist in the way normal companies do. It has no owner, it has no shareholders to answer to, and it has no face. You can find Larry Fink on TV every day, but can you name the CEO of this company? Can you pick him out of a lineup? Probably not. This company controls the retirement savings of 50 million Americans. It holds the voting rights to Apple, Microsoft, Amazon, and even the media companies you watch every day. And unlike BlackRock, which is publicly traded and scrutinized, this company operates in the dark. Its name is the Vanguard Group, and today we are going to expose the machinery inside the ghost. We are going to find out who really owns it, how they use your money to control your life, and why the index fund might be the most dangerous invention in financial history. Welcome to the rabbit hole.
First, let's talk about size. Because humans are bad at understanding big numbers, let me put this into perspective. If you stacked $12 trillion in $100 bills, the stack would reach past the International Space Station. That is the amount of money Vanguard manages in 2026. We often say BlackRock is the biggest, and on paper their AUM is similar. But here is the secret that nobody talks about: circular ownership. Who is the largest shareholder of BlackRock? If you look at the SEC filings, you will see a familiar name at the top of the list: the Vanguard Group. Vanguard owns more of BlackRock than BlackRock owns of itself. But it doesn't stop there. Let's look at the S&P 500, the backbone of the American economy. Pick any major company. Apple? Who is the #1 owner? Vanguard. Microsoft? Who is the #1 owner? Vanguard. Amazon? Vanguard. Google? Vanguard. Tesla? Vanguard. It is almost a mathematical impossibility, but they have done it. They have effectively bought the entire stock market. So when you see Pepsi fighting with Coca-Cola for market share, you think it's a competition, but Vanguard is the top shareholder of both. When you see CVS and Walgreens competing for drug prices, you think it's a free market, but Vanguard owns both. This is called the illusion of choice. It doesn't matter which phone you buy, which airline you fly, or which bank you use. The profit ultimately flows into the same massive reservoir. Now you might be thinking, okay, they're big, but that's just business. Why is that dangerous? It is dangerous because of structure. BlackRock is a public company. If Larry Fink does something crazy, the shareholders can sue him. The stock price can crash. Vanguard is different. Vanguard claims to be owned by you. They claim to be a mutual company where the profits go back to the investors. It sounds like a socialist paradise, right? Wrong. This mutual structure is actually a perfect shield. It allows them to operate with zero transparency and zero accountability. And this is where the story gets terrifying. Because the people running Vanguard realized something important. Ownership is boring. Control is where the real power is.
To understand why Vanguard is so dangerous, you first have to understand why it is unique. In the world of finance, there are usually two ways to structure a massive company. Option A is the public company model, like BlackRock. They trade on the stock market. You can buy their shares, ticker BLK. They have to release quarterly earnings reports, and if they lose money, the shareholders scream at the CEO. Option B is the private company model, like Fidelity. They are owned by a family, the Johnson family. They don't have to tell the public anything, but we know exactly who is in charge. Vanguard is neither. Vanguard operates under a structure that is almost unheard of in the corporate world, the mutual ownership model. Here is the official story they tell you on their website. Vanguard is owned by its funds, which are owned by the investors in those funds. This sounds beautiful.
It sounds like a co-op or a credit union. The logic is, you buy a Vanguard S&P 500 ETF. That ETF owns a piece of Vanguard Group Inc. Therefore, you own Vanguard. In theory, this means there are no outside shareholders siphoning off profits. All the profits go back to you in the form of lower fees. And to be fair to their founder, Jack Bogle, this structure did revolutionize investing. It saved Americans trillions of dollars in fees over the last 40 years. But there is a dark side to this benevolent ghost. While the structure eliminates profit motive, it also eliminates accountability. Think about it. If you own shares of Apple, you can vote on shareholder proposals. If you own shares of BlackRock, you can vote to fire Larry Fink. But as a client owner of Vanguard, do you have any say in how the company is run? Can you vote on who becomes the CEO of Vanguard? No. Can you vote on how much they pay their executives? No. Can you demand that they stop pushing ESG policies? No. You are an owner in name only. In reality, you are just a customer. The actual power lies with a small, self-selecting group of executives inside the company. Since there are no outside shareholders to question them, and the client owners have no voting rights within the parent company, the management team is accountable to nobody. They are a self-perpetuating oligarchy. They hire their own successors, they set their own salaries, and they decide how to wield the voting power of $12 trillion without asking you. This mutual structure is the perfect camouflage. It allows them to operate in the shadows. Because they are not a public company, they don't have the same level of SEC scrutiny as BlackRock. Because they don't have a recognizable Bond villain CEO like Larry Fink or a billionaire family like the Johnsons, nobody pays attention to them. They hide behind the millions of teachers, nurses, and firefighters who invest in their funds. They say, "We are just representing the little guy." But if you look closely at their actions, they are not representing the little guy. They are using the little guy's money to muscle the biggest corporations on earth. This is the brilliant trick of the Vanguard structure. They have socialized the risk. It's your money they are playing with, but they have privatized the power. It's their vote that changes the world. And that brings us to the most terrifying part of this machine. It's not the money itself. It's what the money allows them to do. Because when you own a piece of every company in America, you don't just get dividends, you get votes. And those votes are being used in ways that you never agreed to.
Most people think of the stock market as a place where you buy a piece of a company to make money, but that is only half the story. When you buy a share of stock, say 1 share of Apple, you are buying 2 things. First, you are buying the economic right. This means if Apple makes a profit and pays a dividend, you get a check. Second, and more importantly, you are buying the political right. This means you get a vote at the annual shareholder meeting. You get to vote on who sits on the board of directors. You get to vote on the CEO's salary. You get to vote on company policy. Now here is the trick of the century. When you invest in a Vanguard S&P 500 ETF, VOO, you are making a trade. Vanguard says, "We will give you the economic right. You take the dividend check. You take the profit." But in exchange, Vanguard keeps the political right. Vanguard keeps the vote. This is called the separation of ownership and control. You own the capital, they own the power. And because Vanguard manages over $10 trillion in assets, they have accumulated the largest voting bloc in human history. In almost every single company in the S&P 500, Vanguard is the #1 voter. They control roughly 10 to 15% of the total votes for every major corporation in America. Now, you might ask, who decides how to cast those votes? Do they ask the millions of teachers, nurses, and retirees who own the funds? Of course not. That power resides with a tiny, secretive department inside Vanguard called the Investment Stewardship Team. This is a small group of people, fewer than you would find in a typical school classroom, sitting in an office park in Malvern, Pennsylvania. And yet, this small group has the power to swing elections for the board of directors at Exxon, Disney, Microsoft, and Pfizer. Think about the absurdity of this. You work hard for your money.
You invest it for your future, but your money is being used as ammunition in a corporate war that you didn't sign up for. If Vanguard wants a company to adopt a specific social policy, like DEI hiring quotas or net zero climate goals, they don't need to pass a law in Congress. They just call up the CEO of that company and say, "We own 15% of your shares. If you don't do what we say, we will vote against you at the next meeting and replace you." The CEO has no choice but to comply. Quick pause. If this breakdown is something you think more people need to know about, do me a favor and hit that like button. Let's force the algorithm to show this truth to everyone. Now, let's look at a real-world example of this power in action. Take the case of ExxonMobil in 2021. A tiny activist hedge fund called Engine No. 1 bought just 0.02% of Exxon's shares. They wanted Exxon to stop drilling for oil and focus on green energy. Normally, the CEO of Exxon would laugh at a 0.02% shareholder, but Engine No. 1 had friends. They convinced the big three, Vanguard, BlackRock, and State Street, to support them. Vanguard voted against the existing Exxon board members and installed 3 new directors who were friendly to the climate agenda. Overnight, one of the world's biggest oil companies was forced to change its entire strategy, not by the government, not by the customers, but by the passive index fund managers. This is the paradox of passive investing. We are told that index funds are passive, they just track the market. But in reality, they are the most active force in the market. Because they own the entire index, they can't sell the stock if they are unhappy. If they don't like what a company is doing, they can't just walk away. They are forced to stay. So, to protect their investment, they are forced to change the company from the inside. This creates a scenario where a handful of unelected asset managers act as a shadow regulation agency. They bypass democracy, they bypass the free market, and they do it all with your money. But wait, it gets worse, because Vanguard doesn't just own one oil company, they own all of them. They don't just own one airline, they own all of them. And when one entity owns all the competitors in a single industry, something very strange happens to the price of the goods you buy.
Competition is the engine of capitalism. If McDonald's raises the price of a burger to $10, you can go across the street to Burger King and buy one for $5. This forces McDonald's to lower their price or improve their quality. The customer wins, the business works harder. This is how the free market is supposed to work. But what happens if the same person owns both McDonald's and Burger King? Does that person want a price war? No. If Burger King lowers its price to steal customers from McDonald's, the owner loses money at McDonald's. It's like stealing money from your left pocket to put it in your right pocket. So the rational move for the owner is to raise prices at both restaurants. The customer loses. The businesses stop innovating. This is exactly what is happening in the American economy today. It is called horizontal shareholding or common ownership, and Vanguard is the king of this game. Let's look at the airline industry. For years, economists were puzzled. Why were airline ticket prices going up even when fuel costs were going down? Why did airlines stop competing on price? A famous study revealed the answer. The largest shareholders of United Airlines are Vanguard and BlackRock. The largest shareholders of Delta Airlines are Vanguard and BlackRock. The largest shareholders of American Airlines are Vanguard and BlackRock. The largest shareholders of Southwest Airlines are Vanguard and BlackRock. When the top institutional investors own the entire industry, they have no incentive to encourage competition. In fact, they explicitly discourage it. In earnings calls, you will often hear analysts from these big firms telling CEOs to practice discipline and capacity restraint. Translated into plain English, that means don't fly too many planes, don't lower ticket prices, keep the supply low so we can keep the profits high. The study estimated that airline ticket prices are 3 to 7% higher simply because of this common ownership. And it's not just airlines. Look at the banking sector. JP Morgan, Bank of America, Citigroup, Wells Fargo. Vanguard is the top owner of all of them. Look at the tech sector. Apple and Microsoft. Vanguard owns both. Look at the food industry. Coke and Pepsi. Vanguard owns both.
This helps explain why we are seeing sticky inflation. Even when supply chain issues are resolved, prices don't come down. Why would they? If you own the entire monopoly board, you don't need to negotiate. You are paying a Vanguard tax on almost everything you buy, from your plane ticket to your checking account fees to your soft drink. This creates a weird form of lazy capitalism. Companies don't need to innovate as much because their biggest investors also own their competitors. The pressure to be the best disappears. The goal shifts from market share to industry stability. It becomes a cozy club where everyone wins, except the consumer. And here's the ultimate irony. Jack Bogle founded Vanguard to lower the cost of investing for the little guy, and he succeeded. You save money on management fees, but what you save in fees you might be losing in the higher cost of living. The index fund revolution has inadvertently created a monster that stifles the very competition that made America rich. But higher prices are just the beginning. If you control the entire market, you don't just control prices, you control behavior. You control what gets built, what gets funded, and what gets canceled. We are now moving from economic stagnation to something much darker. We are moving toward a planned economy run by algorithms, a concept they call universal ownership.
What happens when an investor becomes so big that they effectively own the entire economy? They stop acting like an investor. They start acting like a government. This is not a conspiracy theory. This is a well-documented economic concept called universal ownership. In the old days, a shareholder cared about one thing: is this specific company making money? If you own shares in ExxonMobil, you wanted Exxon to pump as much oil as possible, regardless of the consequences. But Vanguard doesn't just own Exxon. They own the insurance companies that have to pay for climate disasters. They own the real estate companies that lose money if sea levels rise. They own the tech companies that need stable energy prices. When you own everything, your incentives change completely. You stop caring about the individual performance of a single company. You start caring about the system. You start caring about externalities. This is why Vanguard and BlackRock are so obsessed with ESG, environmental, social, and governance. It's not because they are woke, it's because they are universal owners. They're willing to sacrifice the profits of ExxonMobil if they believe it will protect the value of their Apple and Microsoft shares. They're willing to force a coal company to go bankrupt if they think it helps their insurance portfolio. This sounds logical on paper. Ideally, a benevolent dictator would run the economy this way, balancing everything for the greater good. But here's the problem. Who elected them? Who gave Vanguard the authority to decide which industries live and which industries die? Who gave a private asset manager the power to regulate carbon emissions, hiring practices, and social policies for the entire Western world? In a democracy, we debate these issues, we vote for representatives, we pass laws. In the world of universal ownership, there is no debate. There is only a phone call from Malvern, Pennsylvania, to the CEO of a Fortune 500 company. Do this, or we vote you out. By 2030, projections show that the big three index fund managers could control over 40% of the votes in the S&P 500. That is a mathematical tipping point. At 40%, they don't just influence the economy, they are the economy. They can effectively veto any corporate decision they don't like. They can force companies to merge. They can force companies to split. They can force companies to adopt political agendas that the actual citizens, the voters, never agreed to. This is the birth of a new economic system. It is not capitalism because there is no real competition. It is not socialism because the state doesn't own the means of production. It is corporate feudalism, a system where a few massive institutions own all the land, all the resources, and all the capital. And the rest of us, we're just renting. We rent our homes from their REITs, we stream our entertainment from their media companies, we work for their corporations, and we pay them a fee for the privilege of investing in their funds. The scary part isn't that they are evil. The scary part is that they are unaccountable. If a politician makes a bad decision, you can vote them out in 4 years, but Vanguard is forever.
Their power is locked in by the very structure of the retirement system. Every month, billions of dollars automatically flow from 401k paychecks directly into Vanguard funds. It is an endless river of capital that makes them stronger every single day. So is there any escape? Is there any way to opt out of this machine? Or are we destined to live in a world run by an algorithm?
So here is the harsh reality. Vanguard is not a group of evil villains plotting in a smoky room. It is something much more dangerous. It is a machine. It is an automated, self-driving algorithm that has one simple instruction: buy everything. It doesn't have a conscience. It doesn't have a soul. It just consumes capital and accumulates power. And right now, that machine is on autopilot, heading towards total domination of the global economy. Can you stop it? Individually? No. You cannot fight a $12 trillion giant, but you can opt out. You can refuse to be a cog in their machine. Here is your escape route. 1. Stop being lazy with your capital. The reason Vanguard became so powerful is that we became lazy. We handed them our money and said, "Here, you manage it. I don't want to think about it." That convenience cost us our freedom. If you want your power back, you have to take responsibility. Instead of buying a Vanguard ETF where they keep the vote, buy the individual stocks yourself. Technology is making this easier every day with direct indexing. You can own Apple and Microsoft directly. You get the dividends and you keep the vote. 2. Own assets they cannot print or control. Vanguard thrives in the fiat currency system. They thrive on debt and inflation. To truly escape, you need assets that exist outside of their financial matrix: gold, silver, Bitcoin, small business equity, farmland. Vanguard cannot print more Bitcoin. They cannot inflate the supply of gold. These are the lifeboats in a sea of corporate feudalism. 3. Support the uninvestable. Vanguard only cares about the biggest public companies. They don't care about your local butcher, your local mechanic, or the small family business down the street. When you spend your money at a small business, you are starving the beast. You are keeping capital in your community, away from the hands of the big three. The system wants you to be a passive consumer. It wants you to live in a rented house, work for a mega corporation, and invest in an index fund that votes against your interests. Don't give them that satisfaction. The ghost in the machine is real. It is powerful, but it only has power because we gave it our money, and we can take it back. We have now exposed the two biggest giants, BlackRock and Vanguard. But there is one final piece of the puzzle. If these companies control the economy, who controls the money itself? Who decides when the dollar lives and when the dollar dies? If you want to know the terrifying truth about the death of the dollar and how to prepare for the currency collapse of 2026, you need to watch this video right here. Click it, and I'll see you on the other side.